Hey everyone, welcome back to your weekly market outlook. This is for the 3rd of June 2024. Let's get started with a quick recap from last week. I don't think we have a lot of information from last week. We do see Australian inflation picks up a little bit from 3.5% to 3.6%. This is obviously above the consensus of a slight drop to 3.4%. And in terms of preliminary GDP numbers coming up from the US for the quarter, it has improved a little bit above the consensus to 1.3%. It's like a slight drop from the previous quarter, but it is still higher than consensus. And we have the flash CPI numbers from the Eurozone. We saw inflation also picked up from 2.4 to 2.6% above the consensus. Core CPI also picked up from 2.7 to 2.9%. Now, obviously, the core PCE numbers coming up from the US, and this is basically the main focus for the FOMC. We saw a slight drop in terms of growth from 0.3% to 0.2%. So we are looking at a potential of the inflation kind of slowing down in the US for a little bit. However, it doesn't change much in terms of whether or not it's actually going to bring inflation down. The drop in terms of growth from 0.3% to 0.2% at this point in time, it's pretty negligible. It is in the right direction, but it is very, very slow. Okay, so for this week, we are going to talk about a few stuff. Obviously, number one, we just had the OPEC meetings. And in terms of OPEC meetings, the OPEC members has basically agreed to cut the output, but we're not looking at that being reflected into oil prices at this point in time. So in terms of the outputs, they are currently being removed. And in terms of projections for manufacturing numbers, particularly in China, they do expect demand to increase, especially from China in terms of manufacturing as it starts to pick up. All right. Let's take a look at this week's number. Obviously, this is going to be the week where we're going to get our NFP numbers from the US. But before that, there are a couple of interesting things to point out. Number one is the Bank of Canada. Bank of Canada is expected to be live in terms of their rate cut. We're currently expecting a cut of 25 basis points from 5% to 4.75%. Same thing with the ECB. The ECB is also expected to hold their first rate cut from 4.5% to 4.25%, another 25 basis points cut. So the Bank of Canada, ECB, both of them are expected to start cutting interest rates. So obviously, the surprise is going to be from the ECB. Now, in terms of whether or not this has actually been priced into the euro, I believe this has already been priced into the euro. There are going to be two surprises here coming up from the ECB. Number one, not as much of a surprise, but the ECB is likely going to go with the rate cut and then announce that further rate cuts at this point in time is, dependent on the data. So that could actually be a boost for the euro dollar. Now, the other thing is that the ECB does not cut interest rate. They could maintain it at 5%. And again, this scenario could also be a boost for the euro dollar. So two of the scenarios that could happen here, either a rate cut happened or a rate cut didn't happen. That could potentially boost the Euro USD, considering the context that we have here in terms of what the market is already expecting from the ECB, that the market could already have priced in for that 25 basis points cut. Again, comments coming out from the ECB would really change a lot of the stuff there. If the ECB does mention that, sure, we're going to cut interest rate now, but in terms of further rate cuts in 2024, that's really up to the upcoming data. That could be a boost for the euro. The other scenario would be a cut from the ECB, and then the ECB starts announcing potential for further rate cuts in 2024 to happen. That could weaken the Euro USD. So again, look at the three scenarios that we just outlaid here. Two of them could pose a potential boost for the euro dollar. Now, Let's take a look at the US labor data here in terms of what the market is expecting. Average hourly earnings is expected to pick up from 0.2% to 0.3%. The NFP numbers is expected to gain slightly more than last month, 175,000 to 185,000. We might get a little bit of a slight revision from last month's number. We might get a little bit of a revision to the upside. And obviously the unemployment rate is going to be the main focus for a lot of traders. This is currently expected to remain flat at 3.9%. Obviously, that could be a potential for the previous number to be revised up to 3.8%. Any surprises for to the upside for the US dollar would be the unemployment rate dropping down to 3.8% or 3.7%. Now, this is going to be the trigger for the stronger US dollar there. Now, let's just jump in onto the technicals because I want to talk about the dollar index. Take a look at the dollar index. This one here is in a range bound market condition. This is currently inside the Ichimoku cloud. The two things that could trigger the drop or the increase in the dollar index is that if the ECB sounds a little bit more on the hawkish side, even if they do the rate cut, that could push the dollar index slightly below the Ichimoku cloud, but we still have support at 104. The other boost for the weaker US dollar would be if we have a weaker labor market that could push the US dollar even lower below 104. However, in the scenario where we have the labor market improving, then we could see a slight increase in the dollar index, but we're not expecting the dollar index to start rallying up at this point in time because this is currently within the Ichimoku cloud. In terms of range, we have support at 104. Immediate floor for the dollar index is at about 104.50, and in terms of resistance, we are looking at resistance at 105 and 105.50. This is all still within the boundaries of the Ichimoku cloud, so we are expecting more or less a stable US dollar at this point in time. Next up is the Aussie USD. For the Aussie USD, considering we have that higher inflation from Australia, obviously we have a stronger we have a stronger foothold on the Australian dollar here. We have 66 cents acting as a very strong support. In terms of resistance, we're looking at 67 cents. Again, for the Aussie USD, this is a very stable currency at this point in time. Even if there's a drop to the downside, we still expect 65 cents to hold. That's also where the Ichimoku cloud on the daily time frame is expected to be. So for the Aussie USD, we're expecting this to remain within this range. This is currently a very stable currency. Now, next is the Euro USD. In terms of price movement for the Euro USD for the past 2 weeks, it has been pretty much a boring movement. We're not moving anywhere above 1.09. We're also not dropping below 1.08. However, the past week's movement around that 1.08 level has confirmed that the 1.08 level is a level where we saw demand in the market. And at this point in time, considering that 2 out of the potential 3 scenarios for the ECB rate decision this week could be beneficial for the Euro USD. We expect the Euro USD to come and test 1.09 level again. But again, for any further uptrend to continue on the Euro USD, it needs to break that key level at 1.09. In terms of support, obviously we have 1.08, but take a look at where the Ichimoku cloud is located. It is pretty thick, and we have support going all the way this week to support 2 at pretty much at 1.075 on the Euro USD. Now for the pound USD, this one here has maintained that position above 1.27. This is looking a little bit exhausted. We're still being capped by 1.28. Now if the euro gains, there could be a potential where the euro pound could actually rally with it as well. That could put a little bit of a pressure on the sterling, and considering that we have an election coming out in about a month's time in the UK, there's a lot of political concerns that could take the sterling down a notch here. So again, support here that we're focusing is definitely going to be 1.27, but we're not looking at significant demand around 1.27. I think we're still expecting more buyers to come in at 1.26, so it is still ideal if we saw that drop in the pound USD closer towards 1.26. But regardless, we set up 1.27 acting as a little bit of a floor, and it dropped below 1.27, then we expect the next move to be towards 1.26 at this point in time. Key resistance remains at 1.28. In terms of extension level, it is currently limited at 1.2825 for the sterling. Next up is the dollar Japanese yen, and for the dollar Japanese yen, a little bit of an information here in terms of how much the Ministry of Finance used to intervene in the market last month. The amount has been disclosed. It is actually 9.7 trillion Japanese yen. That brings it up to about 60 billion US dollar. This number is significantly higher than the intervention that happened in 2022. So with all that money poured into the market, it still doesn't make the Japanese yen stronger. In fact, if we take a look at the dollar Japanese yen, this is currently pushing up higher. This has already broken above 157 in terms of support. We are currently looking at 156 there, which is right around the Ishimoku cloud, and below 156 we still have 155.75, 155.50 for the dollar Japanese yen in terms of support. Obviously, we are focusing on the support trend line that we have there, which was from the previous symmetrical triangle. This is likely going to be the guide that a lot of carry traders are going to be looking at. The dollar Japanese yen right now is still on the path for the move to the upside. Again, support there is likely to come in at 156. Resistance currently is at 158, but further movement and a grind towards 160 is still to be expected in the market there. So with that, good luck for your trades this week, and I'll see you soon.